Well, we hope you all are enjoying your long Labor Day weekend. Tomorrow, Monday, September 2nd, of course, is Labor Day, a day that we get to have off from our labors to celebrate labors. Is that how it works, Kristen?
A little ironic, but yes.
Yeah, the irony is not lost. Welcome into the program Dollars and Cents, where we help you make sense out of all of life's financial decisions, regardless of the day. My name is Joel Garris. Joining me on this week's episode, Kristen Castello. Good morning. How are you?
I'm good, Joel. How are you?
I am excellent. Fun Labor Day weekend ahead, right? What do you got cooking?
Yeah, so we're actually throwing my brother a surprise party for his birthday.
Oh, okay, well, then is he a regular listener to the show?
He is not, but...
Oh, why not?
But it is pretty difficult to throw a surprise party nowadays with technology and texting and social media, so we'll see how it turns out.
Very good. Tell him he also needs to listen to the show. He needs to, listen up to his sister on air.
Yeah,
right?
Yeah, I think I should.
There you go. As for me, I am dealing with some college move-in logistics this weekend. The other thing that immediately springs to mind is, I don't know if you felt this, Kristen, past week or so, it seemed like you could almost feel the shift to perhaps, dare I say, fall here in Central Florida.
Yeah, with back to school, it's really kind of getting into the season.
It is. The temperature might just be 2 or 3 degrees less than what it was back at the beginning of August. Maybe. I think I felt a little bit of that this past week.
Maybe.
Maybe. Indeed. So, but what that does mean, of course, is that as the calendar does turn to September, our lineup of educational events sort of restarts. July and August, when everybody's traveling, people are on vacation. We don't actually, those are the 2 months out of the year where we don't actually have an event other than our school drive, which ended last week. September means that our lineup of educational events starts up. And of course, we've been talking to folks on the program as well. Our book, Next Gen Dollars and Cents, came out last week, or the week before actually, as an ebook. So make sure you check us out on your Kindle or whatever the other options are for those ebook readers. Also doing some chapter videos on the book as well, so make sure you're checking that out on our YouTube channel. So, as always, of course, Dollars and Cents here to help educate you. We got a couple of things we're going to help educate people about today, right, Kristen?
Yeah, so one of the first ones we're going to talk about are IRS surprises and some scams that are going on.
Yeah, so surprises and scams, not a good combination. And, of course, we got some retirement account savings changes as well to talk about that. So let's, I guess, start with the IRS. Not certainly good to get surprises in that front.
Right. So we're going to be talking about victims of scams today, and particularly victims of scams that pull out money from their retirement accounts and not only get hit with the scam itself, but also by the taxes, the tax hit on that. So we're going to go through some examples today of this particular scam and then ways that you can avoid this scam, some key takeaways for you.
That is for sure, some key takeaways indeed, because what people forget about how all of this works is that if you take money out of your retirement account, the government doesn't care where the money went. It's taxable, and you've got to pay taxes on it. So we're seeing some real instances where people are kind of really suffering that double whammy. And then the other one that we'll talk a little bit about, give you an update as we do often, particularly, Kristen, when you're on the program, talking about the employee retention credit. This one started out as good intentions, but ultimately became a bit of a scam as well.
Right. Much with any legislation that comes out that quickly, there's always loopholes, and these scammers just take advantage of these loopholes and exploit them as much as they can.
Starting to see the beginnings of a number of criminal investigations as well involving this employee retention credit. For those of you who forget what that is, that was a COVID-era tax credit that was afforded employers to sort of offset if they were still paying their employees, but their revenue was in decline. So in that case, think restaurants, hairdressers, those types of businesses that really had effectively shut their doors. Some people actually wound up paying their employees through that, even though they didn't have any money coming in. the employee retention credit was designed to really help specifically out those people.
Right, right. But there were these ERC, employee retention credit mills, that sprouted up from that were just looking for businesses, trying to take advantage of them to exploit this credit. So that's unfortunately what we're looking at today.
Correct. And so that's a little bit of a different flavor. Also, we're going to update you on the latest sea of changes to your retirement and your retirement accounts and how it affects your money. This all comes from the Secure 2.0 Act, where a number of changes were made to retirement accounts about a year and a half ago, if I recall correctly, on the timing of when that last legislation passed.
Mm-hmm. Yeah, but some of those changes really haven't come into full effect yet. They might be legally available for you to take advantage of, but some of them, they just, the custodians, the companies just haven't come around to getting all the kind of dotting the I's, crossing the T's, getting all the things in order to have them implemented.
And the key concept there is going to be make sure you understand what these changes are and really put pressure on your employer to make sure that, hey, if there's an option that I can do with my money, particularly as it relates to my retirement account, my 401k, step up to the plate and make sure it's getting done, if you will.
Mm-hmm. Yeah. And a lot of these changes are related to Roth contributions, Roth money. So really just a big push for IRS to get some tax revenue in as well.
Yeah, that's one of those good news, bad news, right? You either save now or you save later. Either way, the IRS is going to get its taxes. But certainly with the Secure Act, a lot of those changes had to deal with the Roth side of things. So I guess we'll start with kind of the scams and surprises that unfortunately play a much bigger impact on the finances of regular folks these days. And these scams are particularly tragic, particularly when it involves victims who pulled money out of their retirement account and then sent it off to someone that basically stole their money. This is becoming more and more of an issue, Kristen, isn't it?
Mm-hmm. I mean, we're hearing about it from just prospects, clients, just everyday people that kind of fall into these traps. It seems like the scammers are getting more sophisticated. It's no longer just a robot calling you where you can kind of tell that it's fake right off the bat. I mean, these people are calling pretending to be Social Security agents, FTC, Federal Trade Commission agents. They pretend they have an ID number. They might know something like your date of birth or what credit card you use, and it just makes it seem more valid, and people are kind of falling for these a little bit more now.
Well, and I think the problem is that we put so much information out there on social media. One of the tricks that we've heard is that you get these quizzes online that say like what's your birth month, or what's your favorite animal, where'd you go to high school, all of those. Those aren't designed because someone is just curious. Those are part of the scheme and the scams that are taking place out there.
Right. Yeah, and it's unfortunate. So all that information's out there.
Don't answer those easy, quick surveys, because chances are it's not really somebody that has an interest in what your favorite animal is or what your high school, what high school did you go to. The reality is that those are typical security questions that exist, and so what's happening is that they are farming that information. Just really unbelievable. You mentioned that this has come up in conversations that we've had. Just had a conversation about this just this past week where a client called in to talk about what had gone on with her coworker. So we're going to take a break, and when we come back, I want to tell that story of what we just encountered this past week at the office, where a coworker of a client had fallen victim to one of these scams, and now really scratching their head as to what to do next. So all of that coming up next here on Dollars and Cents with Joel Garris and Kristen Castello of Nelson Financial Planning. So here's the story we were starting before the break. Got an email from a client to me that said, hey, can you mind if I call you and talk to you about a situation involving a coworker? And I said, yeah, sure, absolutely. So we connected, and she started to tell me this story of how a coworker had met somebody, they had moved in together, And at the end of the day, the coworker sort of figured out a way, or the coworker's crook friend, I guess is the best way to describe it, figured out a way to actually access that individual's IRA account, proceeded to take money out of that account, have that come as checks to the address that they were living in, forged the signature, that's where the crime comes in, and then ultimately cashed it and gambled the money away. And now this coworker of a client of ours is staring at the fact that during the course of this 12-month period of time where this sort of romantic scheme wound up playing out, it was a $350,000 distribution out of the IRA. Unbelievable.
That's horrible.
And then what are the tax implications on that off the top of your head?
Oh man, it's got to be at least $100,000.
At least 100, yeah. I mean, so not only did you wake up realizing, hey, wait a minute. And the romance scam is one of the oldest in the book, right? Mm-hmm. I mean, someone finds you on the internet, or someone picks you out of a crowd or whatever, and becomes buddy, and then before you know it, then there's a relationship, albeit a fake relationship, at least from one party's perspective. And in this particular case, it was pretty costly. All the money's gone, so and no way to pay the tax bill on that. That's pretty rough. That is for sure. But Kristen, you were telling me that there's actually been a Senate special committee on this very issue. So tell us a little bit about that.
Yeah. So all of these sorts of cases, like you just described, have triggered this special Senate committee to kind of put together a case and release a report that just details some examples of this and the implications and what people can do to kind of avoid these sorts of scams. So they saw dozens of scams like this where these individuals are facing huge tax bills on money that was taken from them, that was stolen from them. And in particular, a lot of these victims were elderly as well. So the report cites the case of a guy named Larry. He's a Pennsylvania retiree. He's in his 70s. He responded to a pop-up on his retirement account. He was logging in, and this pop-up popped up, so he thought it was valid because it's on his retirement account to begin with. Somebody claiming to be a Social Security official, so he was tricked into withdrawing all of his retirement funds, which was $750,000. And that triggered a $220,000 tax bill.
Wow.
But much like with the example you just said, he had been scammed out of the money. The person that scammed him got him to buy cryptocurrency with it, and that was just instantly stolen from him. So now that he's got this tax bill, he's got no money to pay the actual taxes since all of his retirement funds went into the cryptocurrency. So now he's borrowing money. He's using the last of his emergency savings just to try to pay this tax bill. So it's just a completely terrible situation, and they're trying to figure out ways to avoid this in the future.
Yeah, so let's talk a little bit about that. I mean, there's no clean way under the tax code to be able to really address this, and no forgiveness, because there's no tax authority that would say, hey, we understand that the money was stolen from you. If it's a distribution out of a retirement account, it's taxable no matter what. And these incidences are on the rise and becoming more and more sophisticated.
Right. So back before 2017, there used to be some relief for this. It was an itemized deduction. It was for personal theft. So this is where you could potentially take the loss for the money that was stolen from you. But during the Tax Cuts and Jobs Act, that provision was eliminated. So unfortunately, scam victims between 2017 through now haven't had any sort of relief for those sorts of scams. There's no tax relief for that.
So I remember that one. So that deduction, I think it had like a 2% threshold or something like that, if I remember correctly. But clearly, it would have allowed you to write off the losses. All of that was part of that shift to the much larger standard deduction that happened in that 2017 piece of legislation, and it did eliminate a variety of deductions that people previously had. I think one of them was unreimbursed employee expenses was in that that category.
Yep.
And then losses as well, theft losses, casualty losses, all of that wound up going away. So what's the conversation out of Washington? Because this is, talk about unintended consequences. This is a perfect example of unintended consequences, that's for sure.
Right. So earlier this year, there was a bill introduced to help restore that casualty loss for personal theft losses so that situations like this could qualify for some sort of tax relief. And in that bill, they proposed to make it retroactive back to 2017 so that these scam victims could get relief for those taxes they ended up paying. But unfortunately, there's been no update on that yet.
Wait, are you telling me that the folks in Congress haven't been able to get anything done on this?
Hard to believe.
It's shocking. Unbelievable. Anyway, so there's been talk but no action.
Exactly, yeah.
And meanwhile, people are falling to this more and more and becoming victims. And the double whammy is just, I can't even imagine what somebody must feel with that kind of you were stolen from, and then, oh, by the way, you owe taxes on top of that.
Mm-hmm. And to take away that deduction was meant to streamline the taxes, make it easier with the larger standard deduction. There was no way that they really anticipated this coming out of it. So they're trying to backstep, but unfortunately no answers yet.
So we got some key takeaways. This is the important part of this segment of the program. We got some key takeaways in terms of what you can do. So welcome on in here to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars, including how to avoid becoming a scam victim, because that's becoming more and more of an issue. We're one of Central Florida's longest running radio programs, coming to you on a host of stations throughout the Central Florida region. Also a top 25 financial planning podcast on the World Wide Web. So make sure you check us out on your favorite podcast channel, or go to our YouTube channel if you want to see what Kristen and I look like while we're doing the show live here inside the Nelson Financial Planning radio studio. Yes, our studio is at our office. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary with Nelson Financial Planning. Joining me, one of the folks on the team at Nelson Financial Planning, Kristen Castello. She is a certified financial planner, certified financial fiduciary, and certified public accountant. That is a mouthful of letters.
Yeah, thank you, Joel.
Very good indeed. So let's get to the real meat here. We're going to talk about some of the signs to really alert you to whether it's a scam that is coming on your doorstep and what you can do to try and avoid that. So what are some of the signs that people need to be aware of?
So any pressure to act quickly. So anybody that's telling you, I need an answer now, you need to send me the money now, that's a clear sign that that is potentially a scam.
Or you're going to go to jail. If you don't do it now, you're going to go to jail.
Right,
yeah.
Right. They tell you not to tell anybody, so that they make it sound like they are the only person you can trust. So that's usually a sign that it's a scammer.
Really tough because, again, you mentioned earlier, Kristen, the target here is elderly, right? So don't tell your adult children. Don't seek out counsel. Don't tell anybody. We'll get it taken care of. Very convincing when they make those arguments.
They request unusual payment methods like a gift card, or in the example we gave earlier, cryptocurrency.
Yeah. Yep. A friend of my son's got actually scammed on the gift card thing with a fake email with his boss directing him to buy gift cards for the rest of the team. And it's just amazing how we talk about elderly being the target, but it's all age groups. And even more so now, we're seeing an uptick in the amount of those scams targeting folks that are young as well. Well, we got a lot more to share with you on this topic, signs of a scam and what you can do about it to help you ensure that you're making the best possible decision with your money. Coming up next here on Dollars and Cents with Joel Garris and Kristen Castello of Nelson Financial Planning. So on the program, we're talking about what has been an increase in the amount of scams involving people taking money out of their retirement accounts to pay a scammer. And then not only have they lost money, but then they created a tax bill for themselves. So much so that this has actually finally got some interest out of the folks in Washington that special Senate committee that was established to kind of look at this issue a little bit more.
Yeah, so it's trying to avoid that double hit for these scam victims. So they pull the money out of the retirement account, it's scammed away from them, and then the huge IRS tax bill comes on April 15th.
One of those unintended consequences when the tax changes that happened in the past eliminated the ability to write off a loss like that, a theft loss like that, where you no longer have that option. So it's interesting that they've actually talked about making a change retroactive all the way to 2018 to help victims of scams. But the far better strategy is to try and avoid a scam in the first place. So we were talking through in the last segment, Kristen, about some of the signs of a scam and then what you can do to avoid it. By the way, if you're a regular listener to the program, make sure you check out our Facebook, because we actually posted this on our Facebook, kind of a summary of the signs of a scam and what you can do. So look for us under Nelson Financial Planning on Facebook, and you'll also see this as a document as well. So what else is kind of some of the signs of the scam besides the ones that we were talking about before the break?
So if somebody asks you to wire money, that's usually a scam sort of thing.
Right. Or Western Union, same kind of concept. Yep.
They tell you don't hang up.
Right.
So they want you to act right now.
Right. It's kind of like if you get a fish on the line, and you don't want the fish to go, so you just keep hanging on. Okay. And the more you can keep the fish on the line, the more likely you are that you reel the fish into the boat, which is the whole point of what they're trying to do.
Exactly. And then they also ask for confidential information.
Right.
Yeah. And then what you can do to avoid these, or if you are part of a scam, or if they called you and you're in the middle of this, what you can do is slow down, write down their information, and just make sure you don't give any of your identifying information out. So there's nothing wrong with writing down the phone number, doing a Google search, writing down their name, doing a Google search, and just kind of slowing it down a bit.
That's solid advice whenever you are confronted with somebody that has a threatening tone, that is telling you must act quickly, you must act with urgency, don't tell anyone. If you slow down, then it really does help to really maybe see what actually is happening before it happens to you.
Yeah, and then also just call somebody that you trust, whether it be a family member, sibling, your spouse, your financial advisor, just somebody that you can talk to, explain the situation, and get a second opinion on whether you think it's a scam or if it's real. So kind of just getting that second opinion on it.
Well, and it's so important. Look, there isn't anything out there that at the end of the day you are going to be legally required to not share, right? I mean, you can share whatever is happening, particularly with a trusted individual, and ultimately discuss that. Now, this other item that we were talking about earlier, Kristen, involving sort of the other scam, or what became a scam, the employee retention credit. This one is a COVID era one. We were talking about it earlier in the program, where it was designed to help employers who kept their staff paid, even though their businesses were closed during sort of those early days of COVID. But ultimately, professionals, or I guess professional scammers, came into the mix and encouraged many more businesses to do that were not really eligible. And Kristen, the IRS is kind of turning the page and going after people on this thing.
They really are. There's so many of these ERC mills, is what they call them, that has taken advantage of this. That, I mean, the IRS has opened 460 criminal investigations, which means potential jail time for some of these scammers. They've rejected over 28,000 business claims so far, which has saved the IRS $5 billion. So these numbers are incredible. And the IRS has identified about 30,000 fraudulent refunds that they're trying to claw back, meaning they've already issued these out, but they're trying to go after these companies and get the money back from them.
Yeah, and so consequently, we would urge you, if you were victim to one of these ERC mills, to really take a look at what was filed. There is some opportunity with the IRS showing a little bit of grace here. whereby you can pay back only 85% of the credit, because typically these ERC mills took 15% as sort of the normal cost. So an opportunity to kind of make it right and have it not necessarily cost you anything out of pocket beyond the amount that you got. But you really got to take advantage of that, because I don't think that deal's going to be there forever.
No, it's just through November 22nd. So
okay.
Couple more months.
Yeah, deadline is, clock is ticking. So if you go past November 20th and the IRS comes a knocking, they're not going to be quite so forgiving on that.
No, they're probably going to assess interest, penalties, so above and beyond that balance that they sent you.
So that's an important date for our listening audience to know. If you've got a business, or if you know somebody who had a business that might have taken advantage of this or filed and got a big refund, you really want to tell them to take a second look at what was filed on their behalf, because after November 20th, because it's basically been about a year where the IRS has kind of had this deal where you couldn't send the money back in and, hey, no harm, no foul, you got scammed, so we understand. But after November 20th, good luck.
Yeah, and with these, I think it's important to remember that when they were contacting you, these ERC mails were claiming that you had nothing to lose, that they would file this ERC credit for you, and that you would get this refund, and they would just get a portion of it. So you didn't pay them anything out of pocket. You really, in theory, they were quoting you had nothing to lose from this, when in actuality, the IRS is imposing all these interest penalties. So if you did submit one of these claims and you think it's fraudulent, it might be a good idea just to withdraw that claim.
Indeed, that might be a good idea. And I guess we put that in the category, if it sounds too good to be true,
Right.
probably is. Anyway, speaking of things that have changed a bit, we'll shift gears and talk about Secure 2.0. Now, this legislation, Kristen, was passed about a year and a half ago, but a lot of the stuff in it really hasn't come online hardly at all at this point.
Right, we're seeing a lot of it that it should have been available last year or this year. It's just the reality is it just hasn't come into effect yet.
So these retirement changes that are coming, the legislation that was passed, some of them are widely discussed, but others are. A couple of them actually popped up that we were talking about this past week as we were prepping for the show, that even I wasn't really totally aware of in terms of what was in that big old piece of legislation. Some of the more widely discussed ones, but there's also some lesser known ones. So we'll talk about that, because Kristen, there's basically this Roth push, if you will, inside the Secure 2.0. So let's talk a little bit about what that means.
Yeah, so there's some proposals in this that have come into effect that really are pushing for Roth, which would kind of generate more IRS revenue now. So
Right.
the Roth push is you pay the taxes now, whereas the pre-taxes, you pay the taxes in the future. So one of the pushes is, the first one is there's no more required minimum distributions from Roth 401ks. This is something that probably should have been enacted years ago. So there were no required minimum distributions required from Roth IRAs, but the 401k Roth had this little loophole that required them. So what they've done is kind of made it even across the board. No required minimum distributions for Roth 401ks or Roth IRAs.
Sort of harmonized, if you will, what makes sense from a rule, because a Roth doesn't have a required minimum distribution, but now finally Secure 2.0, a Roth 401k also does not have a required minimum distribution. So just one of the things that is in it. Besides that, we got three other things that we want to share with our listening audience, plus a couple of those lesser known changes to your retirement account. So we're going to talk about that in the next segment here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, also a top 25 financial podcast. My name, of course, is Joel Garris. With me this week is Kristen Castello of Nelson Financial Planning. Stay with us through the break, and we'll continue the conversation on these changes to your retirement accounts. So we're talking about the changes courtesy of the Secure 2.0 Act that are coming online, and we were in the middle of kind of talking about four of the largest ones, but the commonality of these four particular changes and how they impact your retirement accounts have to deal with the Roth side of the equation. So the one that we mentioned before the break, no longer are RMDs required out of Roth 401ks. They've never been required out of Roth IRAs. The legislation sort of harmonized that finally and put 401ks and regular individual retirement accounts on the same plateau, if you will. Mm-hmm. So what's the next one, Kristen?
So the next one has to do with catch-up contributions. So this is for if you're an employee age 50 and above, you're able to make a catch-up contribution to your 401k. Currently, the amount is $7,500. So starting in 2026, if you make over $145,000, that catch-up contribution has to go into a Roth 401k.
Yeah, so got a couple more years before this one actually comes into play, although that'll be here before you know it. So 2026, and so what that is it's basically saying, hey, if you're over 50 and you get the option to do extra money into your retirement account, well, we're not going to let you do that with tax savings. You got to pay those taxes now. Mm-hmm. And I guess that is part of the theme on the push to Roth is we need that tax revenue now, not later. I don't know what they're going to do later, but, they're not worrying about that for now. So what's next on this one?
So now for SEP IRAs and simple IRAs, these are self-employed plans or small business plans, you can now make Roth contributions. So it used to only be pre-tax, and now you can make those Roth contributions.
And that is good for 2024.
Correct,
right?
Yes.
That was the rule prior to 2023 and previous. 2024, hey, you can make that as at least as an option from a simple and a SEP perspective.
Mm-hmm, that's right.
Cool.
And the last one here is that employer matches can now be made to a Roth account. So this can be Roth 401k, 403b, that sort of thing.
So that's like the matching amount that the employer would typically put in. If it's 50% of the first, 6% or whatever the formula is that your particular employer uses, then they can do that on a Roth. Now, there's a little bit of an asterisk on this one, I think, isn't it?
Yeah, I think the issue is that no platforms are really ready for this yet. So we haven't seen this in real life yet. We've just kind of seen the legislation come out. It really has to do with the 401k companies being able to offer that match, and then also the payroll platforms, because you have to adjust the payroll taxes for those contributions.
Yeah, so this one, it's the law of the land, but not sure if it's an option for the vast majority of people, because there has been that slowness to adopt and address this particular issue. So kind of some good news, bad news, really, Kristen, on these tax changes that are part of Secure 2.0, or at least this group of tax changes that we're talking about today on the program. If you're looking for tax savings, you're going to have to go elsewhere. You're going to have to wait, so to speak, because remember, if you put money into a Roth, well, there's no tax savings when you do that, but when you do take it out in retirement, then there is some tax savings. So I guess that is kind of the good news, bad news is no savings now, but in theory that savings comes down the line as well.
Mm-hmm. Yeah, and Roth's really a great idea for younger employees, so something to keep in mind. These Roth new legislations might be really beneficial for younger employees.
It certainly is. Those folks typically in lower tax brackets, so that tax savings is perhaps of less value to you if you are in those lower tax brackets.
Mm-hmm. Right.
That is for sure. So we got a couple of things that I think many people haven't talked about that we wanted to share as well. What's this first one? Because this one, we were talking this last week. This one's kind of confusing. So walk us through sort of this one here.
This one really is. So this is for spousal beneficiaries of an IRA. So it has to do with spouses that are different ages. So if you're older and your younger spouse passes away and you, in theory, inherit that IRA account, in the past you would just treat that as your own. So if you're the older spouse and you're in required minimum distribution age, you would have to pay the required minimum distribution based upon both of those accounts, in theory. So now what the new legislation came out saying is you can essentially keep those two accounts separate, so that when if the younger spouse passes away before RMD age, then you don't have to take the RMD on that pocket of money that you would have inherited. So I think what you'll have to do is keep those two accounts separate, and calculate the RMDs separately on those two specific accounts.
Great, almost notated as sort of a special beneficiary IRA, if you will. So,
Right.
so to get this straight, so Stephanie is 2 years older than I am. Okay, I croak. So Stephanie could then use my age for the required minimum distribution as it relates to my retirement accounts. Did I say that correct?
I think so. Yeah.
Stephanie will be thrilled to know that. So so that's the planning if I croak. So what's the other one?
So the other one here is that there is a new statute of limitations for missed required minimum distributions. So it used to be an indefinite period. So if you missed your RMDs for 20 years, the IRS could go after you for 20 years. Now they're limiting it to 3 years. So that's a pretty significant change and offers a lot of relief for people that hadn't been taking it for some time.
Yeah, so the 3-year statute of limitations, I mean, that's a pretty short look back period of time. So yeah, it's kind of like whatever the sins are, they'll stay in the past, and we're not going to worry about it, at least from an IRS enforcement perspective. So some interesting stuff. And I guess that really highlights why it's so important to understand the implications of these changes as they relate to your taxes, as they relate to your retirement account. And of course, that is the purpose of the program, because that's what we cover each and every week, is ways to help educate you, whether it be about scams and how to avoid them, or whether it might be scams that are turned into scams if there's professionals telling you to do something that sounds too good to be true, particularly with that employee retention credit. And then, of course, understanding some of the different retirement changes that are impacting. That is for sure. So some interesting conversation and territory we covered this week on the program.
Yeah, so just a quick recap. The earlier part of the program, we were talking about scams and kind of how to avoid them, so that if you are on the phone with somebody that is pressuring you or making you act quickly, just to kind of take a step back and slow down the conversation, take some information down, do some Googling, try to figure out kind of if they're a real person or not.
No, that is very true, because it's becoming more and more common. And again, as we were sharing earlier in the week, just this past week, we had a call from a client who was talking about a situation involving a coworker, $350,000 out of a retirement account, all taxable. The person, went off, took the money, did whatever they wanted to with it, and now this person's probably looking at about $100,000 tax bill and has no money to pay it. They're trying to do something about it in Washington, but they're not really very efficient up in Washington these days.
It doesn't seem like it's moving very fast.
The hope would be is that there is some restoration of a deduction that used to be around prior to 2017, and that was the ability to write off theft losses, which unfortunately not an option now.
No, it was eliminated with the Tax Cuts and Jobs Act back in 2017.
Certainly important to recognize the signs of a scam. We were talking about that earlier. Again, check out our Facebook because at Nelson Financial Planning, because we posted this as a graphic on our Facebook page this past week. Signs of a scam, what you can do to avoid. We've been talking about that at length, slowing down, avoiding that pressure to act quickly, telling you not to tell anyone. Boy, there should not be anything involving your finances that you have to hold in the strictest confidentiality, where you cannot tell a trusted individual, a friend, or maybe an adult child. Mm-hmm. At the end of the day, that's so important. And then don't forget those retirement changes as well, that big Roth push, right?
Right. So catch-ups for those over age 50 now have to be Roth if you're a high earner. You can make simple and SEP Roth contributions. And you can do employer matches, can now be Roth contributions.
Yeah, all interesting stuff, some of which hasn't quite taken a hold yet, but it is coming, so keep an eye out for that. And after all, that's one of the purposes of the program that we do each and every week here on Dollars and Cents, is to keep you informed of all of those things as they develop. So thank you for listening to this week's program. If you have any questions about anything that we talked about on this week's program, or how it might impact your own personal finances, don't hesitate to check out out our website, nelsonfinancialplanning.com. There you can fill out the Contact Us form and reach out to us for an absolutely free conversation. This has been Dollars and Cents with Joel Garris and Kristen Castello of Nelson Financial Planning.